Ladies and gentlemen, welcome back to part 6 of Concepts That Made Me Profitable. We are going over this beautiful PDF that I myself made along with some help of an old friend. Okay, so breaking it down, page 51. The key to quarter 4. If quarter 4 is overextended from quarter 2, price should reverse. Think, does this change the way you take profit? Right. So if we are going to break this down, I will actually hold on a second. I will pull up my chart here. And we are going to imagine this in a chart, right? So let's find a quarter 2 open, shall we? Which is just what? What, guys? You. What is it? You. Tell me what it is. Tell me. It's a true open. Okay, so we are going to lock in here. We are going to lock in, find ourselves a true open. Okay, so let's find us an example. Okay, great. Right here, true London open. Price expands away from true London open and is far away from quarter 4. And in quarter 4, you get a Q4 reversal, right? Now, when do Q4 reversals not necessarily occur? When you're closer to that true open. Now, this example, you have it, goddamn, you have it essentially just tapping using sweeping this and then heading off, which in my eyes is more of a continuation of trend, you know, low, higher low here. So that being said, you can scroll back through your charts and really okay, think about it. We're far from true open. We have an SMT that will take us back toward true open within quarter 4. Yeah. What does that tell us? That tells us to trade toward the true open because we are expecting quarter 4 to reverse. On to page 52. Stop doing that, Zinya. The key to quarter 4. If quarter 4 does not overextend, if quarter 4 is not overextended from Q2, price should continue. Think, why does this settle your nerves while in a stalling market? So, essentially, this was aimed to think. Okay, think. You think. When we are in an uptrend, yeah, quarter 2 opens. And we're staircasing like this. We're staircasing. You're in a long already, right? You're close to quarter 2 open, but not crazy far to warrant a reversal, and there's no SMT, right? That can give you an extra confluence for a continuation play, yeah? So, moving on. Page 53. Quarter 4 on the monthly cycle. Most of the time, we should expect the 4th week of the month, the quarter 4 monthly cycle, to be lackluster, right? It shouldn't be the best price action. And for those of you watching this the day it comes out, which is the 21st of November, that's actually next week, I believe, and it's Thanksgiving weekend. So be wary. This is mainly due to the fact that price should be completing its monthly liquidity objective around that time. Right. So in quarter 4 in the month, it should be taking a significant higher low. It should be filling in a significant fair value gap, generating some sort of buying or selling interest, and it should be tapering off ready for quarter 1 the following week. So basically, because price has reached its liquidity objective, what can we expect price action to do? Consolidate, reverse slightly maybe, usually consolidate. Okay, 54. I know a lot of you guys want more on this type of stuff, Magneto and doubling theory. I'm making a part 2 sort of to this, where it's 20 quick pages, going over stuff like this, going more in depth, showing you more examples, showing you how you can look for it. Because I know you guys are like, oh, doubling theory. Trust me, it's not that crazy, but I will go over it regardless. You need an old sequential SMT lower high for a target, and your new sequential SMT for change state delivery toward the oldest sequential SMT. So it's Magneto, right? Magneto is you are targeting old sequential SMT lows or highs for your short, for your target, for your short target, yeah? if we had SMT here and this one, it could bounce back and forth, right? How does this tie into doubling theory? Now we find out on page 55 here, one asset does not complete the Magneto. Right, sorry, my cat is bothering me right now. Just 1 second, please. Okay, 1 second. 1 second. Anyways, this is essentially, like, you can look at this, like, if some of you know patterns, it's kind of like an expanding triangle, like it gets bigger and then it breaks out one direction, but with a little bit more logic, and I'll break it down for you. Now, look, we have our old SMT lows that we can trade up to here, take this high, right? Then you have SMT up here, yeah? In this example, this should have been a failure swing, but maybe the SMT is on a different asset, right? These is just two. Then we have our SMT here, and this one only takes the low. This one does not take the low. That is what Trader Day calls doubling theory. Now, there's a bit of nuance to it. I believe there's more things time-based behind this. I'm not entirely sure, but this is what Day said about doubling theory. Now, mind you, there's a PSP here, right? See how they interlock and everything starts to get rolling and everything gets really nice. So yes, think, where would you target now? If you're in this long, where would you target? Another Magneto? What do you got? No. See you later. Okay, 56. Another form of doubling theory. Now, months, right? Month to month SSMT or SMT is technically doubling theory, right? You should be looking at month highs and month lows, right? You should be. If you're a trader, monthly highs and monthly lows are very important. Very important. Yeah, because if you have SMT on them, that can dictate an entire week of price action or more. Yeah? So because months obviously are not quarters, SMT between them is considered doubling theory and is very high probability. Think, why is this called doubling theory? There's a lot of speculation behind this. Me personally, maybe it has something to do with 12. Like, I can't even think really right now. I really don't know why you would call this doubling theory. This is Day's definition, right? This is Day's concepts. This is what we learned in 2024, right? Mind you. So, cycle limits. We're kind of throwing it all the way back. Yeah? So, pay attention. Ready? On the indices, microcycle is your lowest. I don't want to see nothing but no nano and picocycle. Like, what in the world? Anyways, 2, session cycles, the 90-minute cycle. 5-minute time frame, 90-minute quarters. Got it? Daily cycle. You're on a 15-minute chart, 6-hour long quarters, 4 quarters, and 1 24-hour day. 24 divided by 4 is 6. Understood? Understood. Weekly cycle. Monday, Tuesday, Wednesday, Thursday. Those are your 4 quarters. Friday does its own thing. Friday is meant to cap off the week. It's treated a little bit differently, right? When in a bullish week, the odds are Friday will be high of the week. Yeah. It will make a high of the week, which means you can make a high and then you can think, okay, that's high of the week, and you can trade off of it. Same with bearish. If you look at this week's chart, you'll actually see that Friday made low of the week on a bearish week, because this week was rather bearish, right? And we actually had a pullback back in toward the range of yesterday's range. So monthly cycle is the weeks. 1, 2, 3, 4 weeks in a month, roughly, give or take. That is the highest you go in indices. Now, in Euro, Forex, it's a bit different. You go higher. So quarterly cycle is within, is that right? I think that's right. Within a quarter of a year, you break those 3 months into 3 quarters. Does it make sense? And the yearly cycle is actually the quarters of the year. So let me break that down again. The quarterly cycle is 1 quarter of the year, so that's January to March. You take that block of time and you divide that by 4, and you're looking for SMT within those 4 quarters, right? Yearly cycle is 1 12-month year broken into 4 3-month quarters. Understood, understood. And crypto is the same as Forex. Now, this is our final page, ladies and gentlemen. How to confirm regular sequential SMT. Although we have found a way to filter SMT with sequential SMT, that does not mean that SMT is useless or can't play a part in a reversal. In fact, it can be a tell of a lower time frame sequential SMT that is coming to set off the expansion. This is how we can confirm regular SMT. So, we have a higher time frame SMT, regular SMT, with a lower time frame sequential SMT. So that can look like on, say you have SMT with like Asia and New York AM. That's not sequential, but that's still an SMT. But then you drop down to a 5-minute chart and you see a 90-minute sequential SMT from quarter 1 to quarter 2, etc. That is valid, right? That in that case, the lower time frame is confirming that upper time frame, higher time frame, regular SMT. Anyways, ladies and gents, this has been 10 more slides. I hope you enjoy it. We have 3 more parts to this series. I'll be around. Take it easy.